How many of these are you doing a day?
Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have Scott Melker, who's crypto trader and investor, also the host of the Wolf of All Streets podcast, and of course the author of the Wolf Den newsletter. Scott, it's great to see you as always. Welcome back to Trade Talks, and I'm super excited to get your outlook for 2023 as it relates to what's happening within the crypto space. But I'm especially happy to have you on today, where we're actually looking at Bitcoin, Ethereum, the space moving to the upper right-hand corner of the chart. It's been quite some time.
It has. We sort of joke that every time you and I chat is some major blow up and we're talking about the contagion or why the price has dropped 10% in a day. So it is really refreshing to have kind of a bullish beginning to the new year, and specifically to be talking today, depending on the exchange that you look at or the chart that you check. Bitcoin had 9 consecutive daily green candles. So 9 consecutive days to the upside, which hasn't actually happened since 2020. Now, the spread on those candles hasn't been particularly huge. It's not like we're seeing 8 to 10% moves a day, but still, this has been pretty sustained and continuous bullishness since the new year. And it starts to, obviously get people very excited. I mean, in my mind, hard to view anything at this moment as truly bullish because we're still in the depths of the bear market with a lot of macro question marks. But it is really nice, in my mind, to at least see Bitcoin trading back at prices that we saw before the FTX collapse. That's the story to me at the moment, is that the FTX collapse happened. We saw a sizable drop, but have effectively erased that in the last 2 months, which gives us an indication that Bitcoin truly was starting to decorrelate and trade on its own before that FTX crash happened, which, by the way, was a huge decorrelation, just not to the side that we wanted to see.
Right. Yeah, but you can make the argument, too, for all asset classes. I mean, there are a lot of macro uncertainty out there, but to your point that it's back above pre-FTX certainly is encouraging. And, of course, if everyone has a crystal ball, how sustained will this be? Again, you can ask that about the major averages in the equity market as well. But as you look towards 2023 and beyond, how do you think investors are going to start to deploy their capital?
I think they are, and that they've started. I just think that most retail investors have no more capital to deploy. Unfortunately, we're in that situation where you bought the dip, it kept on dipping, and you probably have nothing left to use. But venture capital certainly has billions of dollars still on the sideline. Andreessen Horowitz obviously raised almost $5 billion last year in venture. That has to be deployed. So I would say that if you have access, which most retail do not, but if you have access to early stage right now, I think that's an absolutely huge opportunity, because valuations are down for VCs. Companies are raising at valuations of 20% of what they would have been a year ago. Companies are more lean and mean, I think, and are actually operating as if the bear market is going to sustain. And of course, we can talk about 2023, but most people who are true Bitcoin believers, Ethereum believers, are looking way beyond 2023. And so whether it's 16,000, 18,000, or 12,000 is somewhat irrelevant if you have targets that are much, much higher. I think we're going to see still a lot of ranging and sideways chop and confusion throughout at least the front half of 2023. Could be the entire year for all I know. But I do think that there's another bull market coming soon. You just have to be patient.
Yeah, when you talk about investing, it sounds as if they are deploying capital to the technology side of it, not so much as into the coins themselves. I mean, we recently just came back from CES, and the conversations that we were having around crypto really came back to the improvement of market structure, improving the tech stack, anything around data and AI. It really sounded more that the capital was going towards the technology side of it.
And I think that's a good thing, right? The less we focus on the coins and the price action, and the more we focus on the fundamentals and what's actually being built and how it can change the landscape of technology in the future, that means that we're maturing and that things are going in the right direction, right? Because when you're looking at markets that are being driven by cartoon NFTs and dog coins and complete memes, that shows you that you're in a bubble and it's bloat. And we're not really seeing that. Of course, we did have Bonk last week, but we're not seeing that to the same level now. And I think this has refocused people on the actual technology and what's being built. And I think we're going to start to see some really astounding developments this year. That doesn't mean the coins will go up, sort of as you mentioned, but I do think that we're making that move towards adoption of the technology.
Right, but that's a good thing too because it takes some of the volatility out of the market. I've actually heard more so than ever, NFTs, almost the values of them aren't even part of the conversation, but how brands are looking to leverage them as another distribution channel for their product or for their storytelling, how they can create immersive experiences and exclusive experiences via NFTs. And I think that's, to your point, it takes the volatility out of the market and it becomes a thing and tangible.
I mean, Starbucks is adopting NFTs, but they're not calling them NFTs, right? And to me, that's the signal that things are maturing and improving. NFT is sort of a weird catch-all phrase, and it triggers the wrong emotion in people. They think it's a bubble or that it's a joke. I can't remember what Starbucks is calling them, stamps or something like that, but it's a reward program that is built on blockchain technology, right? And that's really what it is, and that's what we want to see. It doesn't need to be called an NFT for it to be that. I think we're going to see a lot of other companies start to develop these reward programs. It's just superior to the points programs that they had before. I think we're going to see huge movement, which is technically NFTs in the digital identity space. I think that's going to be a huge narrative of 2023, being able to basically protect your identity with private keys, just like any other cryptocurrency, and then use it to log into both Web3 and Web2 platforms. Going to, imagine going to Twitter and you're signing in with a verified identity by clicking a button that's attached to a wallet and nobody can hack or exploit. There's really a lot of exciting things that are happening. It just doesn't feel that way when the prices are down.
All right, Scott, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.